Welcome back to the Medina podcast, guys. Today you go and look at the stock market and it's just completely tanking. The Dow down 400 points. Yesterday I think it was down 1,000 points actually. Tesla I think is down almost $100 since its initial 5-to-1 stock split. I think Apple down $40-50 since his 4-for-1 stock split. Like, this is crazy. You go in the Wall Street Journal, people saying, all the market is doing is taking a break. No, what the market is doing, it's evaluating the fact that, there's articles after articles saying, companies are laying off people, companies are telling people to come back, get their stuff, because, we're going to do more social distancing, we're going to make more space in the offices for when people do come back. Obviously, the hint is there's going to be less of you guys. Wall Street Journal article, Ford hopes to trim about 1,400 workers throughout the buyouts, a company spokesman said. It was 30,000 salary U.S. workers total. I said this before. I remember when they were first saying in the article, hey, we're just asking these people to come back and get their stuff, just for we can rearrange the way the office is for social distancing. And now all of a sudden they're saying no, we're actually about to trim 1,400 workers. Coca-Cola said the same thing. Coca-Cola said, we're gonna buy out 4,000 people, to get out. Obviously the economy is continuing to contract. You go in the stock market for the previous month or two and it's just completely, hitting new highs. People are saying, wow, this is great, we're rebounding, all that coronavirus stuff is behind us now. No, it's not behind us. Things are not getting better because, a lot of people formed their businesses around highly leveraged, business model. It's like, I don't want to wait 5 to 10 years to bring in the revenue that I want to project. I want to rush into it and I want to go take out, $1 million or $2 or even $100 million of debt. That way I can start growing exponentially. But then when you're so highly leveraged and a situation like Corona comes in, and now it's like, wait, now I can't even bring revenue into my business because, I have to close down. People don't want to come in, and now the government is also telling me to close down. So now I'm sitting on, God knows how much debt. I can't even pay the interest down, so now I have to file for bankruptcies. And we've already been seeing, numerous stores file for bankruptcy. JCPenney has been one of them, Neiman's Marcus, Lord & Taylor, etc. And this is why I've been telling people, be aware of the current state of the stock market, because you see these stocks flying high, and all it is just like, hey, a share of business represents, how the business is doing. If the shares are flying high, they're on a huge bull market, is because the business is doing well. But that is not the case here. The case is just, the Fed is coming in, buying off debt from, these companies, bailing them out, giving them free money, and, then these businesses grow they start, taking all this money, paying down the debt, and showing Wall Street like, hey, we're doing better. We're doing good. We're bringing in more revenue. It's like, no, the Fed is bailing you out, so it looks good on your balance sheet, but in reality, it's not. Why? Because when you go outside, you're not seeing what the stock market is projecting. The stock market is projecting the economy is doing well, but when you go outside, you see businesses closing, mom and pop shops are struggling, and then article after article just telling you, hey, more companies are laying off workers. I think MGM, on an article in the Wall Street Journal, said we're laying off 18,000 workers. 18,000. Another Wall Street Journal article here saying U.S. debt has reached its highest level compared to the size of the economy since World War II and is projected to exceed it next year, the result of a giant fiscal response to the coronavirus pandemic. I've been predicting for a year now that we're about to hit a crisis in this country. Obviously that's not the best news people want to hear, but it's the reality of the story. I believe this is probably going to come within the next 6 months to a year. As they said here in the article, saying it's projected to exceed it next year. So you got to look at the economy right now, guys, like a truck. And the tires have been pitched And sooner or later, the truck is going to have to just break down and we're going to have to rebuild it. And that's just what's going to happen. You don't sit on $26 trillion of debt and then say, hey, we're going to print another $3 trillion. And God knows how much we're going to print after that, just to help the American people out, just to stimulate the economy, to get it going, to market ourselves to the world, like, hey, we're doing good. We're gonna do even better sooner. Well, once we get out of this, it's like, no, you're not doing good. You're not gonna do better because your businesses are closing, your people are struggling, so you're not doing well. And that's what we're marketing to the world. That's what we're marketing to ourselves. And the average investor, the average person should be looking out for this kind of stuff. Your question may be, well, I understand this is happening. There's a lot of truth to it. So what does the average investor have to do in times like this? History has shown us that the only thing the average investor can do to protect against inflation, hyperinflation, which I predict is coming, is just stack up on precious metals. Stack up on precious metals. I did a podcast talking about, gold and silver mining stocks. I think they're going to do very well within the next year to two. I think that's a great way to protect your money, to protect your assets. Great way. And this is the only asset that you guys have, well, that we all have, to protect ourselves against the Fed. And stats show us, like, hey, obviously there's a lot of truth to this because gold has been on a bull run for the last year. It was at 1,200 last year. It's hitting 2K this year. Silver was down, I think, over the pandemic sell-off, I think, to $12, $14 an ounce. Now it's hitting 28. It was peaking at $29 an ounce. So obviously it shows that this is a great way to hedge against inflation, and it always will be a great way to hedge against inflation. We're sitting on too much debt. Obviously, who knows what could happen? Who knows? But, obviously is always a good sense to obviously prepare for these kind of things. What was the saying? The saying was, I'd rather have, a gun and not need it than not need it, than not have it and need it. That's what the situation right now. So, like I urge people, go look at precious metals. Go look at how they've been doing over the last year or two. Or even if you really want to get, technical with it, go study how they've been doing for the last 10 to 20 or even 100 years. They've been completely just spiking up. Every time there's a crisis, that's what we go to, as a form of security. All gold and silver are forms of security. Obviously, as an investor, you should be looking at it as a form to prosper in times like this and in times that are coming, So yeah, guys, I just really wanted to touch on that topic. Also, another one that I wanted to touch on was just the fact that, if things like this do go down, we're going to have a massive amounts of people getting evicted out of their home, which already has been happening. But I believe it's going to get a lot worse because, when hyperinflation does hit the United States, a lot of people are already struggling to pay the bills as they are. The average American person, as the article's been talking about, are highly in debt, owe a lot of money to credit card companies. And what happens when, you show up to work and your boss tells you, hey, listen, the check that I'm giving you is basically worthless because, the dollar completely tanked. So now you're coming into work for nothing. Sooner or later, a lot of people are just going to say, hey, I'm not going to go into work. I'm quitting. And that's one of the situations that's going to happen sooner or later. A lot of people are going to get evicted because it's like, I'm already highly in debt. Now the money that I'm getting from my job is worthless. So what am I going to do? The best thing that could ever happen in one of those situations is just the government putting policies in place like, they've been doing, for people not to get kicked out of their apartments. And that's it. But, if, obviously if the situation does happen, which is a miracle, you're still going to come out of the other end, not getting evicted, but you're probably going to owe who knows how much money to your landlord on top of the debt that you already have until the situation fixes itself, which I don't know how long that would take. But that's why, the average person should be preparing, should be stacking up on precious metals to protect against the Fed. That's the only security we have against the Fed. Another Wall Street Journal article, Times Square Hotel are particularly dependent on overseas travel, which has all dried up because of the pandemic, and Broadway shows, which are canceled for now. The neighborhood has a handful of mortgage defaults over the past year, and some hotels have been partially converted into homeless shelters to make up for falling demand from tourists. Hotels have been folding left and right. Companies have been folding left and right. People have been getting evicted. I believe in Cali we have a huge eviction crisis. People are just completely folding one after another. I think New York is gonna be completely, saturated with homelessness. And obviously that's not alright, that's not okay, but I'm just reporting what is going on in the world, and this is just the situation we are finding ourselves in. The economy is sick right now, and as investors, as just the average Joe, we should be looking at precious metals. It's like you got to rewind some of these things, guys, till it's like a broken record and you actually do take action, because as the data has been showing us, is not getting any good. Look at the stock market today, complete sell-off. Yesterday, another complete sell-off, because people are kind of hesitant at this point. You go outside and you look, it's like, wait a second. The stock market is flying, but my banks are still closed. Businesses are still closed. Jobs that are reopening are opening at half capacity. And what happens if this thing does spike over the flu season? That's also another situation. But, like I said, guys, be aware, be prepared for what's coming, and just wanted to touch on those things for today. Till next time, if you guys want to see the podcast on Anchor or Spotify, the link is below. And to everyone that's just been coming on the podcast, showing love, I appreciate it, and thank you very much. Till next time.